All right, guys, I thought it'd be interesting to have a look at some end of cycle price targets, price projections for Bitcoin and for the S&P 500. Remember, we cover everything here on the channel because that's part of our investment plans and our investment strategy is to understand traditional finance and overlay that with Bitcoin and, of course, the major one, the real estate cycle. Now, there are some ground rules we must cover, as we all know that price projections are a bit of bull porn. People get very obsessed with end of cycle targets, and it's kind of doesn't go hand in hand when people expect an exact price or date to happen. Yet we all know at the back of our minds that no one knows the future. You cannot predict 100% accuracy what is going to happen on the right-hand side of this chart. But what we can do is put some probabilities into our favor, have rules and signals in mind to help us get out in case things change, because there's always going to be an invalidation of potential price or time targets. And so if you are prepared with your own strategies, with your plans, and maybe you've been following some particular rules that I use here on the channel, then that would hopefully set you up for a better result come the end of the cycle, whenever that may be. So if that interests you, hit the subscribe button because this will inevitably change. I don't have the crystal ball to the right-hand side. I just try to stack the probabilities in my favor and ride the move as long as possible. For folks that have been here for many years, you know that's exactly what we did back at the lows. We weren't sure 100% it would be the lows, but we were one of the very few to talk about why this looked much higher. There was a much higher probability of the lows coming in late 22 and early 2023. And you've got the receipts on YouTube and X as well, posted at those times in real time, while the masses were talking about further collapses. So with that out of the way, we did well last video. Smash up the likes again, 3,500. Markets are still quiet. Volumes are still down. The masses still aren't here. The retail folks aren't here. Your mum and dad aren't talking about Bitcoin and crypto yet. But inevitably, I think that'll also come. It's a big video coming up, so turn off your notifications, close down the other tabs you've got open there. Let's go. The underlying theory of our investment principle is the 18.6-year cycle, and this is essentially the stage that we are running into now. It's called the winner's curse phase. We're roughly around here now. This changes every few months or so because at the end of the day, this is a 14-year up and a 4-year down. Roughly speaking, when we go back over 200 years of data for this cycle, it has worked every single time. So this is the stage we're going into, and it's the final stage before we collapse. So there still seems to be a fair bit of time left to get those gains to the upside. We'll come back to this in future videos. We want to focus on price targets now for the S&P 500 and for BTC. Now, I want to look at this in stages, first targets and then some end targets, knowing that the end targets will have to change. They have to change as more of the data comes in. I've said that. I really want to stress it because I don't want people to take this away and then say that's it and get lazy, which reminds me to hit up the rules for the for what we're talking about today. The market is always evolving. Always listen to what it is saying. So we have to adjust with the times. Don't bet the house and expect an exact date or price. Hopefully you don't do that. And if you get lazy, you will lose. It's that simple. By lazy, it's basically taking a date and a price and saying, that's it. I'm done. I'm just going to sell up when that thing happens. It doesn't happen like that. And if it was that easy, then of course everyone would be very, very wealthy. So the market's always evolving. Don't expect this to be relevant in 6 months' time. Just look at it for what it is now. And then we see whether the market is progressing towards those targets or not, and then we can adjust as times come. It's like flying an airplane, if anyone's ever done that. It never just goes directly on course. You're always going on and off course. That's the best analogy I've heard when it comes to trading. So you have to keep adjusting it as you go. That's life. That's the way it works. You'd see it in your own life. Nothing goes in a straight line, but when people come to trading, they expect it to go in a straight line because they want guarantees. No guarantees in life. Hopefully we get it. Let's move on to the S&P 500. So I'm just going to make this as simple as possible, looking at particular fibs here and particular levels to the upside. So basically our 1.618, and then I'm going to look at the extension as well. So the extension is something that I use for my trading. It's Gann style analysis. And that allows us to take ranges that the market has produced and then project them off lows, off the corrections that the market has also produced. So pretty simple in theory. To use them, you just have to make sure you're using the most relevant highs and lows for the time period that you want to identify for the next particular move. Of course, there's no 100%. I think I need to keep saying that just so people understand. But here is the first one. So to see whether it is working, I like to see it hit those prices already. So, and what I mean by that is you've got this particular range here out of the October bear market low to this top, projected off the next one, the October 2023 low. And you can see we had a 100% hit at in March of 2024. So it seems like this particular extension is working for now. It broke past 50%. So they're the two key levels that I'm looking at here. And then I look further up to the next particular resistance. So about 5,800 points and then about 6,400 points if I'm getting a doubling of this range. Now things are speeding up. There's so much more I can get into, but of course this video would end up being an hour long and I don't want to go down that path as I so often get very close to doing that. So anyway, that's our first one here, just looking at that. That seems to be working okay for now. You've got an extension, the pullback, that's where we're projecting the next 100% from. Bam, we had a hit, the market reversed, corrected, and now we're trying again to get back to the next price targets. So that's one extension here. So we've got extensions and we have retracements as well. The more hits you get in the same, or roughly around the same price, the more chance there is of a reversal at that price. The same thing goes in reverse. If you use these tools in reverse and look to the downside, you might get a 50% hit. This is how I can get carried away just to try and show you how these tools work, top to low. Okay, so you had a rough 50% hit there and the market bounced from it and got a major reversal. So that's what we got. Anyway, moving on now, we'll make this a little bit quicker. There is the next range. It had a 50% hit, bang on. And now to the upside, there's a 1.618 clustering at 6,400 points. So far, so good. So that's a bigger time frame than this time frame. You can all see that. That's a shorter time frame. That's a longer time frame, a bigger move as well. Next one, let's layer that on. This one's a little bit shorter now. The one we just layered on was this right here. So this extension. I'll take this off so we can see. So the extension right here has had a 1.618 hit, nice reversal, and then we are looking towards roughly around 5,800 points. Now there are a few other prices in here, but of course the video is already long enough, so I'm not going to go into a ton of detail on those for now. The main one I'm looking at is up here at roughly 6,400 points. You can see quite a few price targets clustering at about 6,400 points. Now is that the end of the cycle? Who the hell knows? I don't have that crystal ball, but as you can see, there are a number of price targets to the upside that have some price clusters happening. The first is, of course, right here, what we had, 5,300 points. We've had a bit of a rejection, a correction, and now the market's attempting again. The next is about 58, and then following that's about 6,400. So if we're to see those, see the market get to that, then I wouldn't be surprised if Bitcoin also stalled around those prices. So we'd have to see where Bitcoin gets to when the S&P 500 also gets to meet its price targets. So that's it for the S&P for now. We've got two in mind, 58, 64. Let's move on to the NASDAQ. Now I've got these open so we know what's going on so far. I've got larger time frames here just to have a look at some of those major hits that have just occurred. Then we can see the magnitude of these moves. So this entire run of about 11 years projected again to the upside gave us the top that just occurred. So the NASDAQ repeated this exact range from 2008 to 2020, projected from that high, that's a 100% move of this range, and hit that just in the last couple of months. So 18,500 points, had a correction. Now it's attempting to break through that again. To the upside, 2.618, about 23,900. So a round number, let's call it 24,000. And let's throw on a couple of shorter term time frames as well. We're using this range projected there, a little hit at 50%. The 100% is at 19.7, and not too many that come together closely with 24, but you've got one at 25 and one at 22.5. Let's have a look at this one here. You're starting to get a bit of a cluster in the 19,000, so 19,500, and one more to add to that. You're getting it again here at about 23,900. So they're the next ones that I'm looking for the NASDAQ to then layer up with BTC to see if you start to get some sort of rejection at those prices sometime 2024, 2025, maybe 2026. We still have a long time to go here, and see what happens to Bitcoin at those times. So the first number you want to have a look at, keep it in your diaries, 19.5 to about 19.7. You can see three numbers lining up pretty well in the 19,000s, and then we move up to roughly around the 23,900. Yes, there are a few other numbers lower here, so we'll keep an eye on those, but they might just be shorter term corrections on the way before we get a longer term at the more major numbers. That's all it's referring to here. So that's a bit of a time projection for the NASDAQ. So what could bring on one of these corrections? Well, anything that is going on in the geopolitical space at the time. This one goes back 123 years. There is always something going on in the world, always something to be fearful of. Zoom out, it doesn't look like much, but at the times, they can be pretty significant. US financial crisis, the global financial crisis, same thing, GFC, 54% correction for, this is the Dow. You had COVID, that was about a 40%, 35 to 40%, depending on which stock market you're looking at, and then everything else in between. Black Monday, I think it was another 50%, markets recovered from there. So depending on how much time you have, not many people live to 123 years, but overall, market continues to go up from that point with the odd time where it basically goes sideways. So I guess that's what a lot of people are fearful of, is that they're going to get stuck in one of these periods where there is basically no growth and you've got to look elsewhere. So I go back to this. If you get lazy, you will lose. Don't get lazy with your investments, because there are always going to be better opportunities when something else is not doing so well. And that could be a very, very long time. Could be 10 or so years, just like we saw through the early 2000s into the early 2010s, where essentially you had a similar sort of thing. The market went flat. So this is a side note. If we had that just recently, when you look at it in the grand scheme of things, the 120 odd years, then I don't expect us to go through one of these other sideways periods, even though everything seems like it should project to be a sideways market for many, many years, like a lost decade. We had one about 20 years ago that lasted for about 10 to 13 years. Then you had another one 30 years before that lasted for about 10 to 15 years. So I wouldn't expect to get another one of those for several more years. And now doesn't seem to be the time. Don't have that crystal ball, but now doesn't seem to be that time. I think we've got plenty more upside to go. Now, if you're still unsure if the market could go higher, take the UK as an example, a big economic powerhouse of the world, not like in its heyday, but it's still up there in the top 10. The UK stock market, new all-time highs this week and new all-time high daily closing prices of all time, the entire history. The GDP just came back month over month. It has increased. And just end of last year, the UK was in a technical recession. But the market knew something that the news and the masses of people, masses of investors didn't want to believe. The market was telling you that it was time to go up, even though there was a technical recession. You can see these lows that happened end of 23, early this year as well, 2024, and you basically just boomed from that point, 1,000 points on their stock market. So avoid the masses, the mainstream mindset. If you hear the same people on the news telling you the same thing over and over again, that there needs to be a collapse, the market's overbought, it's too high, they 90% of the time get it absolutely wrong. Just follow the charts. That's the main story here. Now, the US dollar is also an important one to have a look at for the price of these assets going up as a potential narrative. Macro theory here, the macro theory I've had, especially if you remember from 2022, is that this was the cycle top. We were going to fall from that point, and we got it within one day just because of how stupid the news is. And well, now we've seen a bit of a base to test the 50% level. So there was a 50% through the middle here. We've been rejected again, potential lower high here. And if this is to fall, then there should be, no guarantees, but typically you would expect there to be less pressure on assets like your stock markets, Bitcoin, and crypto. So we might be at the early stages of this breakdown on the US dollar. I'd be looking for the first number here at 103.5, then 102, and then these lows at around 100 to 101. So there's a few key levels for the breakdown. So this could take throughout 2024 to get back down to these levels and break down, which would then ease the the pressure on other assets and commodities. Now it's time to turn our attention to Bitcoin and review what has happened in previous cycles when Bitcoin reaches a new all-time high. The time it has taken to get to its final peak in the cycle has been roughly around 10 to 12 months. So 10 to 12 months from that all-time high in the last cycle, that took you to the final peak. The cycle before that, the 2017 cycle, was the first testing there to that final top was about 11 months. And we take it back again to the 2013 cycle, that nice big pump from a few bucks up to $1,200. That was about 9 months from when it tested that other high price. So there hadn't been a real all-time high or a real cycle there yet. And that was essentially within the first cycle coming up to test that price. And you had about 9 months left of the excitement and the mania. Now, within those periods, you had multiple months of consolidation. 5 months here, 6 months here. That was in 2013 cycle. Then you also had 2016 to 2017 cycle of another roughly 6 months, and then again about 4 to 5 months. So essentially just looking at how the market pumps, pulls back, consolidates, and then attempts to push to new high prices again. 2020 to 2021 cycle, again, about 6 months. And this one looks slightly different where you could see the price heading up, a pullback, and then you went on to this final run. 3 months for the correction, and then into that final peak. And then, of course, there was the 6 month pump, 6 months decline. So plenty of those things happen. And this cycle so far, we've seen 1 6 month consolidating period between 25K and 32K. So to have a bit of an idea of what's happened in the past, and then to project that forward, well, things are kind of happening quite similarly. This time, however, we ran up to a new all-time high a little quicker than the last cycles, so 28 months, whereas the last cycle took about 35 months. So 7 months quicker this time round. So does that mean we end earlier? It's possible. We end earlier. We don't go up for 3 years and down for 1. Maybe we go up for 2 years and down for 2. We're looking at a 4-year cycle from low to low, not the halving thing that everyone else talks about whenever that bloody halving is. And I've got that in just a moment. So to look at this conservatively, if there is about 12 months left because we've hit that all-time high, conservatively, remember, we will look at the best case scenario going out further in the year. Well, 12 months would take us out to about Q1 of 2025. And to be even more conservative, we were looking at Q4 of 2024, around that time of the election. After that election, at the end of the year, markets could pump from that point. And the reason being is that we had about 9 months here from that run up. 9 months would take us to about December of 2024. I think that's possibly unlikely. I think we would probably extend to maybe January or February. As you can see here, the 12 months takes you out to March. So in terms of that conservative, I'm still just going to follow the market to go into late Q4 or Q1 of 2025. Now, if this particular run was something like we saw before in terms of the time frames, we've just managed to hit that all-time high a little bit sooner, and this doesn't even matter, well, then we would just look at the total time in the cycle itself. So from the low to where we are, it's about 18 months so far. So where were the other cycles at 18 months in? They've experienced a pump, they've experienced a significant decline, and they were in the midst of experiencing a consolidation. So we've seen a consolidation, we've seen a pretty significant pump. Maybe we're in the midst of another decline or consolidation again. You can see the previous cycle, what happened within that 18 months. Remember, it doesn't have to happen with the exact same playbook, but you typically would see like a pump, a decline, a consolidating period over that sort of 18 to 20 months. 18 months, consolidation, pump, consolidation, and then pump. Cycle before that, 18 months. You can see it went little pump here. Well, it's pretty significant when you go from $2 up to $6 or $7. Consolidation, pump, consolidation, pump, and then start of another consolidation as well. There were significant declines, 30-40%, of course. I think this one here was about 50%. So within that 18 months that we've seen multiple pumps, like we saw early on, consolidation, another pump within here as well. We've got another pump here, and now we're possibly going through a consolidation, which could take us out past summer of 2024 for the Northern Hemisphere. So with all that in mind, prices change, fundamentals change, but human emotions, basically the reactions, never change. So the point of all this is after a big pump, the reaction almost never changes from humans. You get a pump, you get a decline pretty significantly in some cases, or the market just fading out because it takes time to recuperate from such a massive pump. You can see it again, pump, recuperate, pump, recuperate. I've gone through that already. So it's basically just look for what the pattern was, and then you can roughly figure out what might come next. It's either going to be a decline or a pause. It's not going to be more significant pump. And we've seen that now. There was a decline, and now it seems like we're in the midst of this pause. It's been about 60 days since the all-time high. So maybe more of the same when we look at the past. Now, the analysis I'm going through can be quite heavy and sometimes a little confusing on how to implement it. When I first started out, it was definitely something that I wanted to learn how to implement myself so that I could make the most from it for my investment portfolio, for my real estate, for my trading, and now, of course, Bitcoin and crypto. TIA Premium is what we have created so that you can get an understanding of how to implement this for your own trading and investing plans to hit whatever goals you are wanting to achieve. So you can join us and our members at TIA Premium. A link to this is in the top of the video description. Join us for a 7-day free trial and learn more about how this cycle can help you and your investment journey. With the short break over, let's dive back into the analysis. Prices. We've gone through each of the markets themselves. Prices for BTC. Let's turn a few of these off so we can get a bit of an idea. And overall, I'm going to say when it comes to the extensions on Bitcoin, it's a little harder to use because of the nature of Bitcoin going into these big moves to the upside. So in the past, these extensions haven't been the greatest tool to use because the moves are just so significant compared to, say, the S&P 500 or the NASDAQ. However, as more money comes into the system, you see less and less. The volatility declines to the upside and to the downside. So with that in mind, let's see if we've got a few numbers to use here for BTC. The previous cycle, low to high, you got the 50% through the middle. That came out about 36. It happened to put in a low last time and bounce and then basically broke down from there. And then on this move out, we saw a little pause there in October, and then it decided to break through. So I think this range is relatively okay to use for now. And we've seen again a test at this top. I don't think the cycle's over by any stretch of the imagination. So I'm just going to look to the upside targets. And the first one there is 135,000. We'll just use some easy round numbers here. Now, if it was to do twice this particular move, so that range for quick maths is about $65,000. So you're just projecting 65 grand off the top, takes you to about that, 135K, project 65 grand again, that'll take you to about $201,000. So that might not be enough for some people. Some people think 500 or a million. I'm going to keep it relatively conservative and, of course, adjust with the market itself. Now, there is one other major tool, you might guess it, that I would use when it comes to trying to forecast the ends of the cycle. 50% is fantastic, but the Gann swing indicator. This is going to help with the end of the cycle. When you see these major moves break down, then you definitely know that almost definitely that part of the move is over and that we shouldn't be trying to load up on shit like altcoins, that there's probably a lot longer to go for the consolidation. So that's something really important that I would continue to use as this market progresses. You can see these nice, beautiful swings, and that's how we identify the projections using the trend-based fib extension. So I'm going to turn this one off and then have a look at the extension that we have now from the current range with the current low. If the low happens to remain at 56K, 56.5, if this low changes, May pumps up and then comes back down, then you'd have to adjust this to wherever that price comes in. But for now, this is the current price that we have, which is why I said at the beginning of the video, these prices will change. So that's a guarantee. These things will change because the market changes. If this low comes in a little lower, we have to adjust. So to the upside, the 50% level, that's the next big one I'm looking at apart from the current top. So the current top's at 73.5, 74 grand. The 50% level, so 50% of this range projected from this low takes us to $81,000. So that has been a number that we've looked at before. It remains to be a pretty significant number for Bitcoin to get through should we break to a new all-time high. And maybe the price does enough just to fool the majority most of the time. That's essentially an old saying that happens in the market. So we'll have to pay attention to that as well. Let's turn on another one. So a bigger price range here and see whether we get any hits for price to come in together. Okay, let's turn this one on right here. Now, this one is the entire range of the previous cycle, low to high, projected off the current cycle low. So a very, very significant range. Now we have had a hit. Wow. At 50%, $48,500. That was our ETF top there at 49. So nice hit there, pullbacks, and then we got a breakout. Now to the upside of that, 100% comes in almost dead on the same 50% level. So we're getting a price cluster now at $81,000. We've got to stretch this to try and see the prices. It's so close. The first one's 80,800. The next one's 81,300. So really close prices there. That's why I've got a pretty strong eye on 81,000 to see how Bitcoin reacts. But is it the end of the cycle price? It is possible. I don't know for sure, but that's why I'm definitely keeping an eye on that 81,000. There's enough there for me to pay attention to the price when it gets to that point, around that 81,000. Possible. There's no guarantees, okay? Let's look to the upside again. 150% of the range comes in at 114,000, and 150% of this range here projected from that low comes in at 130,000. Not overly close, similar to that one there, so between 100 and 130. But the next particular one that comes in at 200%, major range of 65 grand, projected from the low at 15 grand, 200% comes out, it's this long line here, at 147,000, which is getting closer now to a price cluster at 154,000. Draw a line through the middle, about 150, 151. So there's a reasonable price cluster there at about 150, projecting these two. Now, is there anything else? I'm going to look at this particular range next. Let's have a look there. So this is now the fib retracement, looking at this price, projecting it above, straight from the top, as opposed to a corrective move. So the doubling takes you out to 134, and the tripling here is at 200. So we just had a look at that before on one of the other charts. So looking at the doubling here at 135, now we're starting to get a bigger price cluster in that 130s, just below the 150s, and then you've got this other one way out here. So first up, about 80. Call it around number 80. Obviously, 100 is going to be a number that everyone's going to be looking at. Bit of a psychological level, probably big parties going on there, Bitcoin to 100K, all that sort of jazz. And then these next two. There's other ones in between, 115, 120, but I'm interested through here now, about 130 to 150. What goes on with Bitcoin at that time? And on top of that, what happens if we get some other sort of rallies and corrections? Will we be able to start measuring those as the market progresses? And if we start to get some more of those and we can measure this and it comes out and projects dead on to that next level, then we start to get this price cluster coming together higher up on the price chart around 130K as an example. Maybe it comes out at 150. We don't know yet because the market hasn't given us any of that information yet and we have to wait for that in time. But that's going to be the next major interesting point when it comes to projecting these price targets for the end of the cycle, along with the timing of how this comes together with the S&P 500 and the NASDAQ. Do they all start to hit some of these price targets at the same time during the next 1 to 2 years of the end of the 18.6 year cycle? This is the big movie, the big story that I've been very interested in. I have dedicated myself to this for the last decade or more when it comes to looking at this cycle and obviously investing for 17 years now. So this is what I'm fully invested in. I hope you're here to join us on the journey to see how this next 20, 18-year cycle plays out, and then we can add that to the history books together. Subscribe, join us for the journey, like the content. Let's go 3,500. I'll see you back here at the next video. If you want more, links in the top of the video description for TIA Premium and our free report as well, right up there. Thanks again, guys. Catch you at the next one. Till then, peace out.